So I almost live here, not quite, but sometimes I feel I almost live here.
And when you're not working, what fun things do you do?
Well, I have 2 grandchildren on this island that I spend Saturday afternoon. They're young, so we go to T-ball and whatever is going on. So I do that on my son Saturdays. Sunday, I spend the day with my sister, movie, dinner, things of that sort. So, and in between, a little facial, a little this, a little that. So it keeps me busy.
Awesome. Well, it shows you look amazing. Wonderful, wonderful. We've got about 147 people logged in now. We'll give it about 3 more minutes before we get started. So what are some of your most favorite things to visit on the island?
Well, having been born and raised here, yeah, having been born and raised here, you know, you've pretty much seen everything. You just go back and redo things. I mean, I recently went to see the the palace, and it was even more beautiful than I remember it. So I did enjoy that very much. Beaching, I used to do a lot as a teenager, but I'm not into that now. Too old, the skin's bad, you know, you can't get sun on it, you know, that is. So yeah, it's just probably doing things that everybody else does, you know, nothing special, just enjoying Hawaii.
Perfect. What about your holiday? How was your holiday?
Very nice, thank you. I have a large family, so there's about 34 that we cook for Thanksgiving and Christmas. Usually we have it at my daughter's house, and the whole family shows up, so it's a good time. Little ones all the way up to the olders. So, good deal.
Wonderful, wonderful. Yeah. How long have you been in the industry?
Oh, since 1975. So that's a long time. I was a school teacher prior to that, and then got into the insurance business that my dad wanted some help, and then he unfortunately passed away shortly thereafter. So my brother and I took it over. So been here since.
Well, we see the Savio name on plenty of buildings. And so tell us a little bit about commercial real estate and how your family got involved.
Well, my mother got involved in the real estate industry way back when women didn't work. And that was back in the 50s. They had 5 of us. And on my father's salary, I'm sure they decided they couldn't afford not to have her work. So she did go out to work and got into the real estate business as opposed to the insurance business, and did very well at it, worked very hard at it. And, you know, got all of us involved into real estate when we were very young, made sure that we used our babysitting money, and the boys had newspaper routes to buy real estate, which we did as teenagers, and then continued to, you know, be invested in it. So we've always been in real estate and an insurance family. So that's kind of how we all got into buying what we bought.
Right. Amazing. That is such a great story. Thank you for sharing that with us, Sue, and thank you for being here with us today. All right, everybody, let's go ahead and get started. Looks like we've got the majority of the attendees into the webinar. So thank you once again, everyone, for being here. Welcome to the webinar with Sue Savio, Hawaii Condo Update with the Hawaii Association of Mortgage Brokers. And to start us off, let's go ahead and thank our sponsors. Of course, as you all know, here at Hamby, we would not be anything without our members, our board, and of course, our sponsors. So platinum sponsors for this year, 2024, Finance Factors, we've got Freedom Mortgage, Kind Lending, and then as far as our gold sponsors go, we've got Angel Oak Mortgage Solutions, Acra Lending, Ivy Costa with Mutual Underwriters, Territorial Savings, Home Express Mortgage Corporation, and of course, silver sponsors, Deep Haven. Angel is also our education director on with us today, serving the board, and then of course, First Hawaiian Bank. So thank you all to our sponsors so much for allowing us to bring this educational presentation to the community. Thank you. And in regards to Hamby, so remember, we do have all of our committees. This webinar today is brought to you by the Educational Committee, but there's the Legislation Committee, Social Media Committee. All of these committees can be found on our website, which many of you have already visited, has been revamped since 2023. It is an amazing website, very, very versatile, lots of great information. It's also got our events calendar on here. so you can click into the events calendar and see what's coming up, and then sign up for anything that you want to sign up for. So make sure that you are visiting our website. Make sure you're coming back often to see all of the different events that we have throughout the year. It's going to be an amazing year. And of course, if you want to get into community service, please join one of our committees. We are always looking for extra hands to help us out. We've got community service community as well. So if you're specifically into that space, we've got that to work with you as well. So thank you so much, everyone, for being here with us today. And let's go ahead and get the webinar started with Sue. So Sue was born, Sue Savio, with Sarita Savio. Mrs. Savio was born in Honolulu and is the owner of Insurance Associates. Her agency specializes in insuring condominium townhomes and community associations. The agency was founded in 1969 by her father, Rudy Savio, and Mrs. Savio has been the owner since 1975. Sue is an active member of the Community Association Institute, is a national organization dedicated to providing education and resources to the volunteer homeowners who govern their community. Sue Savio is a graduate of the University of Hawaii with a degree in elementary education. She taught school for 6 years before joining us with the Insurance Associates. Thank you so much for being with us here today, Sue, as we are so excited to have you talking to us, because obviously this condominium insurance issue across the nation has been such a hot topic. So thank you so much for being here with you today. And let's go ahead and pass you control. Go for it, Sue.
Okay, so today we're going to be talking about the good, the bad, and the ugly. And there's been a lot of bad and ugly, but we're going to start with the good. And the first thing about the good is 2023 is over. But, whoops, there we go. So we had no hurricanes this season, which is a good thing. We had only one major high-rise fire, not counting Lahaina, high-rise fire in a concrete condo, which was good, and there was no loss of life. So those are very important things for the insurance industry. And of course, for all of us, our property values skyrocketed this last year in 2023. We saw the value of our condominiums, our homes, everything rise in value. One morning we woke up and all of a sudden we were worth a lot more than we were when we went to bed. So this is the good that has happened. Not a lot, but it's better than nothing. So what has happened since is, let's talk about the bad. There has been some very bad things that have happened for those of us who own condos. We had a great increase in our value, but it also increased our premiums. And the property premiums are budgeted the year before for most condominiums, so that gets us very far off when it's time to actually charge the premium and our maintenance fees. So another bad thing is, even though we tried, we could get no new insurance companies to enter the Hawaii market. They don't want to be here. They say we're a small market, which we are. We have like 17 to 1,800 condos or community associations. California, Florida, they got 17,000. New York, they got 15,000. So we're a very small market. They're not interested in such a small market. So it's very hard to get carriers here. And we need to keep the ones we have by taking care of our condos so they don't leave, because then we would all be in what's called a secondary market, paying 10 times what we're currently paying. So we had no more new companies, even though I try every year. We have lots of losses. So that's another reason, not counting the Lahaina fire, but condominium high rises, Oahu. We're famous for our water claims, huge water claims. Okay, so the point where many people's loss ratios are 50, 60, 70%. And if it goes over 50, that means nobody's making any money. Okay, so the insurance companies aren't thrilled with our old buildings. And that is a problem we're having. Old buildings not sprinklered. And look at this slide. It's one of my favorites, okay? These are basically just the high rises. Whoops, did something happen just there? Can you still see that slide? Hello?
Yes, we can still see the slide, but you can start, you can start from there.
Start over because something happened. Don't know what it was. Okay.
Perfect.
So here we go. So even though there were no condos built in 1950, because they didn't have condos back then, they've been converted, okay? And we had 56 built in the 1950s, which is roughly 7% of our share. The 1960s, we had 245, which is roughly 30%. 1970s, remember, this is the build boom going on. We have 331. We can all remember seeing those cranes hanging out in our sky. The 1980s, we had 103, and the 1990s, we had 52. So what has happened is that more than 90% of Oahu condos were built before 1990. So they are old buildings. Old buildings cause a lot of maintenance issues. A lot of money has to be spent to maintain. We have bad pipes, and now we have to put in sprinklers as far as the insurance company is concerned. We need sprinklers. So out of 806 condos, high rises, 90% were built before 1990. This is the problem that the insurance industry says, and why we don't get more people willing to join us here in Hawaii to write our business, because it is a problem. Old buildings, high maintenance, and we're maybe not doing it. That is the concern for the insurance company. So let's talk about the ugly, because the ugly is what we're into right now, ladies and gentlemen. 2023 may be gone, but 2024 is going to be the pits, okay? We had the Lahaina fire. That put us on the map for catastrophic claims. There have been 28 catastrophic claims that hit in 2023. America only, 28. We have never had that many. It's always been 18, 19. One year we had 20, but to have 28 means that the reinsurance rates have gone sky high. Now let me talk to you about reinsurance. Reinsurance is insurance companies that sell only to insurance companies. So if we all take the Marco Polo fire, which we can all remember, $110 million loss, okay? The first $4 million was paid by First Insurance, who had the coverage. They then had reinsured all the rest of that exposure to different reinsurance companies. They have contracts with them that say, okay, I'll take 10 million or 20 million or 50 million of any high-rise condo you write. And this is the price. So our premium is not only First Insurance's money, but it's also all the reinsurers. And they cede the premium, they give the premium to the carriers who they are working with. Those carriers pay through First Insurance the claim of 110 million. So what has happened is when we got on the market for catastrophic claims, there's a map that shows of all the claims of America, and when Lahaina put us on that map, we now are up front center, and the reinsurer said, gee, we didn't have much happening in Hawaii. The only other time we were on the catastrophic map was when Iniki hit 32 years ago. So all of a sudden, they're not as gentle with us. They think of us as possibly being a wildfire state, which been never thought of that about us. And now they also know we have hurricanes. So the Lahaina fire, as bad as it is for the people of Lahaina and those of us in Hawaii, it is also bad for all condo unit owners, because we're all going to be affected financially by it. So what happened after the Lahaina fire is companies took a pause. First Insurance, Fireman's Fund, and DB, Dungbu, who write our high-rise condos, said, hold on, pause time. We're not going to write anything new until we get through 2023. DB went one step further and said, we're going to non-renew many condos. And they're estimating somewhere between 20 to 30% of the condos they had are going to be non-renewed. That is going to be horrendous for those who have units in there or who own in any of those buildings, because Fireman's Fund and First are not taking on anything new. So where is the we only have 3 standard companies: First Insurance, Fireman's Fund, and DB. When a company gets off you, there's no one to go to now on the standard market. That means good high-rise concrete condos are going to be in the secondary market. The secondary market charges a much higher price, 8 to 10 times as much. Also, if you have claims, it's going to charge a much higher deductible, maybe 100,000 instead of 50 or 75. So what is going to happen to this 20 to 30% that DB is non-renewing is going to affect many owners in huge maintenance fees increases. We just quoted an account that DB had non-renewed. They were paying roughly 200,000 with DB, First Insurance not writing new, Fireman's Fund not writing new. So we had to take it to the secondary market. That premium went to $1.2 million. The board was not anticipating this when they did their budget a year ago. They looked at their reserves, they looked at everything they could do, and they said, we may have to literally assess all owners to pay this premium. And that is going to be a huge hit for those owners. Because imagine you have a mortgage there, now and you're paying your maintenance fees, and you had the slight increase that you're anticipating the budget to be. The Lahaina fire came, nobody knew about it, it was coming. We all budget the prior year for what's going to happen in 24. We all budget that around August of the year before, and now all of a sudden a company is saying we're non-renewing. And not just condos that are dangerous or in an area like Lahaina that could create a problem. No, all throughout the whole state, and a lot on Oahu. So the cost for them is going sky high. On top of increased premiums by insurance, the hurricane costs for our state have risen tremendously. We have a company called Fireman's Fund that had to reduce their capacity of hurricanes, that coverage that they have on hurricanes. They write, when they opened up their book of business, they realized, the parent company, that they had 80% of their hurricane exposure in the islands of Hawaii. And they said, we have got to cut that down. We cannot take a chance of 80% of all our hurricane in one state. So they had to reduce their hurricane writings, which means all the people who are insured with Fireman's Fund are on a sub-limit exposure here. And of course, that's creating havoc because banks need 100% of hurricane as well as property fire to sell a loan to Fannie and Freddie. So what's happening right now, and you all know it because you've been dealing with it, is that you're always calling to check or emailing to check on what, do they have 100% hurricane? What's going on here? Because you then have to decide how you're going to handle getting a new loan or refinancing, the case may be. So the hurricane capacity is extremely tight. In fact, of June of this year, 2023, it was already tight where I had actually an underwriter call me and say, I've run out of capacity for Oahu. I have no other companies that want to write hurricane for the island of Oahu. So that's how tight it got. And it's not any better. It's a little looser, but it is very expensive because not only do they write, the reinsurers write coverage hurricanes with their premiums, they're also covering all the wildfires, they're covering all the severe storms, the earthquakes. It's all one company, or there's 40 of them, 40 major reinsurers, quality high-end buku bucks to pay our claims, who are writing paying for the reinsurance. Okay, so they're all saying, not only do we have hurricane in Hawaii, and maybe a wildfire, we had an earthquake in Japan that we're going to be charging for, and we have all these things on the United States, 27 other catastrophes that hit there. So it all affects our premium. Okay, so our premiums have gone up. The average condo, high-rise condo, if they see less than a 40% increase from 23 to 24, they're very fortunate. Most people are seeing 40, 50, 70, 80% increases, okay? Those in the standard market. Those who aren't in the standard market are seeing 300% increases, 400% increases. It's huge. And it means that there's not enough money in the reserves to pay for this, or in their insurance budget, because they did not anticipate losing the standard market. They did not anticipate how high the price of insurance was going to be. And the reinsurers basically say, this is what it's going to cost if you want us to provide coverage for your condo. So many, many condos have decided that they can't afford the hurricane costs. So they have these sub-limits. Take, for example, a couple of Kaka'ako condos that we know about. One's premium was $300,000, which was fine for the main property policy, but it only had a 25 million limit for hurricane. For them to add on full coverage would have been another $630,000 for just the hurricane. So their $300,000 premium almost became $1 million. They decided they could not afford it, had not planned on it, and so they did not get it. And that is what has happened to most of the condos, high-rise condos in our state that don't have full hurricane coverage. It's because it was not budgeted. They would literally have to assess owners and they have chosen not to do so. Whether it's the right decision or not, it's a decision they made based upon the financial undertaking that it would cost all owners if they had to assess or if they had to charge them $7,000 more for insurance. So hurricane capacity is extremely tight, cost is up. We have 375 condos with a sublimit for hurricane, and you know that because you're dealing with it. We know the lenders are not doing conventional loans. Our local lenders are not. Mainland lenders are. And so, of course, we're referring people to all of you mortgage brokers to say, hey, go call so-and-so, they may be able to help you. Because people do still want to buy and sell, and they do want to refinance. So we're doing it in spite of all the things that are saying here that we don't have coverage for. So the good, the bad, the ugly is the worst. And unfortunately, this ugly is going to be with us probably for 2 years or so. When Iniki hit and the insurance industry refused to write hurricane insurance for the state of Hawaii, we had horrible rates for about 2 years. Because of the fire and the increased catastrophes in America, I think it's going to probably take us a good 2 to 3 years before we'll start to see our prices go back down. And they did go back down after Iniki, and they will go down after this. But we have to make sure that we're not having all these catastrophes, because if something happens in California or Florida or in the middle of America, it will affect us. Okay, and even if we're staying clean and we're not doing anything except enjoying our weather, and lucky we live Hawaii style, it's not going to matter if things are going wrong elsewhere in the world, because we pay some of that premium. And that's what has happened to us this year with all the catastrophes of America. We got zapped big time, even though we just had 1 out of the 28. So anyways, what can we do about the good, bad, and the ugly? Hang in tight, people. It's not a pretty picture. So, whoops. Okay, so non-sprinkler buildings, more ugly. Non-sprinkler buildings are not able to buy umbrella coverage. And this is a big deal. An umbrella covers not only the liability of all the owners for anything that happens in the common or limited common areas, it also covers the directors and officers policy. So if some directors get sued or there's some problem, we have this additional coverage. If you think of an umbrella, on the handle of the umbrella would be your directors and officers policy. There would be your general liability policy. If you have employees, there would be the employees policies in case there's a liability exposure. Once those limits are used up, the umbrella above that protects you from the rain is what we buy to provide additional protection above these policies. We recently had a claim where a child fell out of a window of a condo. $9.8 million against the association. They had a $2 million liability policy, and the umbrella policy of $10 million paid out the additional. So an umbrella policy is very important. But because we have so many non-sprinklered buildings, the umbrella carriers are saying, no, we will not sell you an umbrella for your non-sprinklered buildings. So what our condos that are non-sprinkled are doing are buying excess liability, because we can't just live with $2 million knowing that something severe can happen. And it has happened. The Marco Polo fire paid out the $25 million umbrella plus a loss of everything else. We had that 8.9 that I talked about in Maui where the child fell out. We've had children fall off through stairwells at buildings. It's nothing to have a couple $1 million claim, okay, liability claim against the association. So that's why we always like to have a nice, good umbrella that's there to protect. So when you buy just liability, your umbrella, your policy is not protecting the board of directors. It's doing just the liability policy, but it's better than nothing. But if something goes wrong with the directors and officers, maybe $1 million isn't enough and they're going to buy excess directors and officers. So it costs more to do it this way than to have an umbrella. Because our construction costs are up by 30%, our values are up by 30%, and our premiums are up by at least 30%. Condos who have no property, like single family homes, and they just have a general liability policy for the common areas, or maybe a rec center, or they have to insure their streets, they're seeing maybe a 10% increase. It's very minimal because they don't have buildings to insure. But those of us who have buildings to insure, you're going to see at least a 30% increase due to construction costs. Our square foot value before Lahaina, $300 to $325 was the estimated cost to rebuild the typical condo. Now it's up to $400 to $425 after Lahaina. The cost of construction has gone up. There's going to be a shortage. There's going to be all kinds of issues. So the insurance companies have raised it to $400 to $425. So even that alone is affecting your premium because the value's gone up. What also happened, and which is really ugly, is owners are not able to buy HO6 coverage. I had a client call, a hopeful client called to let me know that she was being non-renewed because she had 2 claims. Not her fault. The unit above leaked on her. She had to file her claim. It was below the association's deductible. Her HO6 carrier paid 2 times, but then said, sorry, on renewal, we're non-renewing you. So she had to go out and look for additional coverage. She's out looking with a time when the insurance companies are very careful about what they're writing. Some have taken a pause and not writing. Like Allstate said that we're going to not write HO6s for a while. State Farm is very fussy about that they take on. Zephyr is no longer going to insure anybody's HO6 if your building's pipes are older than 15 years. Many carriers are not taking on HO6 coverage or even HO3 coverage where you insure the whole home if your roofs are not less than 20 years of age. Do you know how many old roofs we have in Hawaii? 30, 40, 50 years old. Those people are not able to find coverage if they're being non-renewed. So owners are having a very hard time. This one woman who called, as I said, she was paying that $250, maybe $350, I forget. But the closest she could get was on the surplus lines, the secondary market, a premium of over $3,000 for her HO6, to the point where she said, if I can't afford the insurance, I'm going to sell my unit because I can't have this exposure. And you can't have an asset that could create a problem and no way to insure it. So she had to make a decision whether she was going to pay $3,000 or sell her unit because she could not get an HO6 policy. So it is really hard. A lot of people are calling. I had someone call the other day. He tried 22 companies. And I said, well, I gave him a name of one. He said, I'll go try that one soon. He called me back and got it. But that was luck. So in other words, it's very, very hard to buy an HO6. I tell clients today when they call me and say, oh, Sue, I have a claim at $600. And I say, but you know what? You got a $500 deductible. Don't file it. For $100, don't file this claim. You have 2 claims, you're going to be zapped on renewal. You're better off to save it for the big thing. And as an insurance agent, that's not my job to tell you not to file a claim. My job is to file your claim. But my goal is also to keep you protected and insured. So many times when clients are calling, not only me, but all the other agents as well, we are telling them, do you really want to use it for this claim? Do you really think this is worth it? It's not that much money out of your pocket. And that's how it has to be. So owners aren't able to buy an HO6, and that's really hard, or some owners in HO3. What has also happened for those of us who own condos, the cost of maintaining our buildings is increasing. Never mind the painting, which has gone up. If you had a bid a year ago, today it's 30, 40, 50% more. If you had spalling, it's gone up. Pipes, I cannot tell you how the cost of replacing your pipes has gone up. And of course, the sprinklers. And everybody has to understand it is cheaper to do it today than it will be 5 years from now. And yes, the cost of all of these things are big bucks. I have a condo called 250 Ohua on the LOI, 56 years old, and their pipes were 56 years old. The insurance company said, you got to do your pipes soon or we're going to walk. And of course, if they had walked, they'd be in the surplus lines marketplace, the secondary market. So they decided they'd do their pipes. Pipes were going to, for this 10-story building, was going to be $4.7 million. We suggested to them that they add their sprinklers in at the same time. And of course, that's more money, but you're going to bust down your walls anyway. You're going to have an engineer come in to design the pipes for your regular doing your pipes, so why not have them design the pipes for the sprinklers? So they decided to do it. It was another $1.5 million. They went out and got a loan, and they'll be starting on it soon. They're the second old condo built before sprinklers, to put in the sprinklers, and we're all excited to see how it's going to go because we want to see that how long it takes. It took Marco Polo 4 years to put their sprinklers in. We're hoping 250 Ohua and condos in the future would only take them about 2.5 years. And it's a mess for the owners to live there with somebody bust down your walls. and it's putting in pipes, and then they're going to fix your wall up, but it's still not a pleasant experience. But as I told that group of owners, better you do it once now and be done with it. And 250 Ohua, I used to live on the Alawai, has a lot of elderly people who bought there 50 years ago, right? The original owners, and the hands went up in the audience who were original owners. And I told them, I know you're old. I know you're saying, why are you doing this? You're only going to be living another 10, 15 years if you're lucky. But I said to them, and I say this to everyone, you're going to pass this unit on to the next generation, to your grandchildren, maybe your niece, your nephew, whatever. You're going to give it to somebody. That is your goal, so that your children or your grandchildren can stay in Hawaii if they choose. Because let's be honest, the young generation moves on Vegas and Texas because it's cheap and they can't afford Hawaii. So I'm always telling my old friends, we got to make sure the next generation stays here. We got to help them buy property. We got to give them the down payment, whatever it takes. Or we got to fix our pipes up so that they can afford to live there when we do pass away, and give them our units so that they don't say 5 or 10 years from now, damn, grandma and grandpa didn't take care of this. Look what I got to do. I got to come up with $50,000 instead of 20, which the assessment was going to be. So I keep on telling owners, this is our job to do this, to get these things fixed, to maintain our buildings. And it is very expensive to maintain buildings, and it increases your maintenance fees. There's no way about it. It is the way of the world. So this is ugly, okay? But it will get better once we get these things going. And once your building has new pipes, spalling taken care of, sprinklers in, painting, you're set now for the next 25 or 30 years or so. And of course, you can do your reserve study to put money in over the next 30 to 35 years for when you have to redo these things again. So, conclusion, the ugly is here to stay, guys. Accept it. I'm trying to convince people it's here. Get an updated reserve study. I tell all my condos this, go get an updated reserve study, stick to it, but put in sprinklers if you don't have sprinklers. Make a line item in your reserve study to save money for sprinklers. And there's no way you'll save enough, but at least you might have enough money to hire the engineer to design it or something if you start saving now. I think we all have to budget realistically. I have many boards they say, well, we really should increase our maintenance fees 20%, but we can't do that. We have old people here. They're on budgets. They're on Social Security. You know what, ladies and gentlemen, we can do it, and we have to do it. As board president, I upped our maintenance fees once 40%. Never mind the rest of the board scream, and all the owners showed up at the annual meeting. It was perfect. Nobody ever shows up, but that brought everybody in, because all of a sudden, what is this 40%? What the hell are you doing to us? Blah. But when we went through it, they said, okay, you're right. We do need to do this. And we've been lucky in that we had the air conditioning went out the following year, which was supposed to last 5 more years. And we had to spend $350,000 to get that fixed. But we had the money because we had already upped the maintenance fees. So I tell people, yes, you have to spend money on maintaining your building. The insurance companies, ever since that Florida condo collapsed, they are asking, what have they done to maintain their building? Have they done their spalling? Because that's why that Florida condo fell, lack of spalling. Okay, taking care of their spalling. So maintenance is a huge item. And so I tell this to board presidents and condo boards that you've got to put money aside, big money aside, for maintaining your building. And I always tell everybody, your only job as a board of director or even an owner in a condo is to preserve, protect, and maintain. So that's where I'm at today. I guess we go to questions. Yes, no?
Yes. Hi, thank you, Sue. What an amazing presentation. So very eye-opening for all of us here, not only in the lending industry, but of course for all of us that also live in a condominium building. So thank you for sharing all of that information with us. We do have a number of questions coming in. So for everyone now, we are open to questions and answers with Sue Savio. So we'll just start with the ones that have already come in. So we've got a question from Von Lay. What will be the actual downfall on newer condo projects, Kaka'ako, from the state's catastrophic classification, and how much?
Okay, so what's happening with all the Kaka'ako condos is, how do I say this? They're not built to the best quality. They have lots of claims. The companies that are writing them the major company that's writing them is not giving them 100% hurricane. The owners have no idea yet what the cost is going to be in maintenance fees. As they build these new condos, the other 10 or so that they're planning to do, as an insurance agent, I get nervous for everybody who's buying one in there. And because I am seriously, I don't think they understand, even the affordable living ones, how expensive it's going to be. They have lots of amenities. They have no idea the cost to maintain them, and they have issues. So I won't say anything more about it before I have the developer on my back.
Thank you, Sue. Next question, also from Von Lay. How much more of a price increase in premiums?
Well, as I said, 24, some people you're going to see at least 30 to 40 if you're lucky. Many people will see more. I think come 25, you will still see another 25 to 30%. It is not going to be going down. So if I had a budget today, my condo for next year, I say, not knowing what's happening, because 24 just started, I would say let's budget a 30% increase on top of what we already budgeted.
Next question comes from Mark James. How are low-rise townhouse projects also affected by hurricane capacity issues?
They're not if they're wood frame. Only the concrete ones are being affected, because the concrete buildings are what are written by our 3 standard companies, by First, Fireman's Fund, and DB. The wood frame ones are being written by companies that aren't housed here in Hawaii, and they write throughout the world. So they spread their risks easier than our 3 major companies do. So the rates aren't as bad. They're not great. They're not as cheap as they used to be, but they're not having anywhere near the issues, unless they have claims, that the high rises are having.
That's some good news. Next question from Naki Wilson with ACRA. Actually, it's a comment. So letting everyone know on this call that ACRA lending is lending with the hurricane sub-limit. So keep that in mind. Next question is, what about new upcoming condominium buildings that will be complete in 2 to 3 years? Do you foresee the insurance costs coming back to earth by then?
For the ones that just got through, like Sky Tower things, they have sub-limits, they have huge increases. If it's coming on in 25, I doubt it. I don't think they'll see a reduction. I'm hoping, again, it's what happens to America with catastrophes. If we have a quiet year, it's not going to plummet down, but they'll say, okay, we can reduce the rate a little bit. We didn't spend billions of dollars in America, okay? Because this year they spent about $145 billion in America. In prior years, I think the year before was 95 billion. Well, if we can only get them to spend a couple billion because we don't have too many problems, that will really help reduce the reduce the cost of insurance. But again, it's not just up to us. It's what happens in America. So pray.
That's always a good solution.
Yeah, I don't know what else to tell you.
Next question comes from Deborah Arguello. What is considered a high-rise building?
Usually a high-rise building is the construction affects it. Okay, so usually 3 to 4 stories, you start getting to hollow tile. Anything above that is usually concrete. So you can have a 6-story building that is a high-rise in the world of insurance, okay? Wood frame is usually what is considered non-concrete, non-hollow tile, which is then not handled by the standard market. So the standard markets will handle hollow tile and concrete, okay? The non-standard markets are taking all the wood frame. They will, if we have a problem with a hollow tile building in the standard market, we can send it to the secondary market, but it would be more expensive. So ideally, you want to stay with the standard market because their rates are cheaper than the secondary market. Okay, but wood frame, they stopped writing back when Iniki hit, because First Insurance and all of them used to write wood frame, but they don't do that anymore. So all the wood frame condos, 2, 3-story type, are being handled by the secondary market. But because they're not having issues with hurricane, the wood frame, and their fires, they're not having the deaths and the problems like we have with Marco Polo and Lele Pono and all the others that had fires. It's a lesser charge for them. So then I would say anything that's hollow tile and probably 3 stories and above could be considered a high rise in the world of insurance.
Okay, so if I'm hearing you correctly, you're saying that wood frame and hollow tile may actually be more challenging to insure than concrete?
No, the standard market, Fireman's Fund First and DB don't want to write the wood frame. So what happens with the wood frame, it goes to the secondary market, but it's a secondary market that is competitive in that it doesn't have to worry so much about the hurricane exposure because we don't have many hurricanes, right? We had one. We haven't had any since for 32 years. So that's important to them. So then they look at the fire issue in our wood frame condos. And in our wood frame condos, yeah, we might lose a unit or two, but it's not like Marco Polo where you have 6 floors and 400 units damaged out of 575. Or you have all the deaths that you had in some of the other condos, or it's not like the fire, the water, the smoke is causing more damage to many units as opposed to the 1 or 2 unit building or the 4 unit townhouse. So it's a huge difference in the way they look at it. Because they look at it differently, those types of projects are easier to insure right now than a high-rise condo. And their rates are not going up as much as our high-rise condos. Okay, whereas our high-rise condos are a lot more expensive.
Great, thank you. Next question, I think we covered this a little bit, but I'll still ask the question. It comes from McKay Wilson. Are high-rises feeling the bulk of these issues, or are low-rise and attached home style, townhouse style condos having the same issues?
Okay, high-rises are feeling the bulk of it because that's where the loss of life, non-sprinklered, all of that matters. Okay. Low rises aren't feeling that. They're feeling some of the problem, some of the ugly, because obviously their rates are going up as well, but they're not feeling it anywhere as near as the high-rise condos.
Thank you. Next one comes from David Fulmer. Is there a list of condos with issues?
Is there a list of condos with issues? I've seen some
list of condos.
The problem is projects renew all throughout the year. You have to call and ask, because is it going to renew with 100% hurricane or not? Originally there were about 300 and so that weren't going to have hurricane or have partial hurricane. I think it's up to about 375 to 395. There's still 400 condos, high rises on Oahu that have hurricane 100%. So you've got to call and ask on renewal, what will it be? And there's no list. Banks have certain ones they know about, but it's not a guaranteed list.
When you say call and ask, are you referring to your office or just the master policy in general?
You have to go to the insurance agent who insures the master policy. I don't insure them all, so don't call me on all of them. The ones that I insure, want to email me or call me, I'll tell you. But the ones that I don't insure, I can't help you on. You'd have to go to the agent who's writing the coverage to ask that question.
Perfect. Thank you for that clarification. Next question comes from David Ige. Do you know what the difference is with forced coverage by the lender versus our own shopping on our own?
Okay, the lender's forced coverage, you're talking about a homeowner's policy as opposed to the master policy, the forced placing hurricane coverage?
Yeah, I think that would be in regards to HO6 or HO3.
Yeah, well, I think it would be HO6. So the HO6 is much more expensive when it's forced placed by the mortgage company. But if you can't find it, I still wouldn't want it, even if I can't find an HO6, because it's not really going to protect me as the unit owner. It's going to protect the mortgage company. So everybody's goal would be to find somebody who would write your HO6, because that's where it's going to be the cheapest. You're going to get the best protection. And that's what you're looking for. So you shouldn't really rely on the mortgage company to force place, because they're worried about themselves, which is fine. I understand that, but they're not worried about you.
Absolutely. Absolutely. Next question comes from Mark James. How are mainland lenders getting around the lesser hurricane coverage that causes local lenders to say that we can't lend in the project?
Being a lender, I don't know, but maybe somebody in the audience does and can say how they're doing it.
Yep. So I think, Mark, that I can help you to answer that question. So the reality of it is that when you do examine the guideline for Fannie Mae and Freddie Mac, it does come down to your lenders and your underwriting interpretation of that guideline. Here, at Hamby, we have examined that guideline quite deep, And the reality of it is that it speaks to 100% replacement value. It speaks to maximum 5% deductibles. It speaks to homeowners and flood, but there's very little information surrounding the wind or the hurricane. So it really comes down to your underwriters and your company's view and interpretation of the guideline. The reason why it's really affecting the local lenders is because they've got intimate knowledge of what's happening in the island. They drive by those buildings every day. They see what's going on. They hear the stories. So that's why you may be having different experiences between the local lenders or certain lenders as others. It really comes down to the interpretation of the guideline and how your company is addressing that. Next question comes from Linda Shar. Any comment on or thoughts on what effects we may see regarding the insurance for the oceanfront condo properties?
Well, the oceanfront condos are just the high rises have the same problem whether you're oceanfront or not, but the oceanfront ones have a flood policy, and the flood policy is going to, when the hurricane comes, if they have a sublimit, the flood policy is going to take care of all the water damage. So the lobby, the first 2-3 floors maybe would be the flood insurance as opposed to the master policy. So you have extra millions to add to your hurricane exposure, which would be the wind damage up above. So it's not, I don't think being oceanfront creates more of a problem. Fireman's Fund, First Insurance, DB, it's not a problem to them to, in the past, to have written these. And going forward, you may pay a slightly higher rate, but as long as you have maintaining it and you've got the flood to go with it because you're oceanfront, it's going to, I don't think you pay more in the flood because that's going up 18% a year for 5 years. It's going up, and I think we're on year 3. So it's still going to go up some more, but at least you have both policies to pay for when the hurricane comes. So oceanfront hasn't a problem to insure, you just pay a little more.
Thank you. Next question comes from Sonia Spitzes. So Sonia, I believe we just answered that question about the mainland lenders and the interpretation of the guideline coming from Fannie and Freddie. Next question comes from Jana Self. Mahalo for all you do, Sue. Can we receive some of these bullet points on slide presentation with this presentation? Yes, Jana. So also we'll be sending out Sue's presentation, and this is also going to be recorded. So you'll be receiving a copy of this recording since you registered today for the HAMBY webinar. Thank you for your attendance. Next question, Mark James. What are the ramifications to mainland lenders not paying attention to Fannie and Freddie rules on insurance coverage?
Again, I don't have an answer to that. I mean, I don't know why it would affect them. They just can't sell the loan to Fannie and Freddie. Maybe they have something else they do with it, but I don't understand that aspect of your business.
Right. James, maybe we can have a conversation about that through HAMBY after this call. Rory Matsumoto is next. So is it your opinion that for the next 2 years or so, the projects that have a hurricane deficiency will now remain deficient unless the AOAO is willing to pay the 300 to 400 times more on premiums?
Yes, I think it's going to continue.
Next question from David Ige. Maybe the question should be, where are the lenders going if they have to place forced coverage on the condo project?
I have no idea where they're going.
Ivy Costa is next. On the personal lines here, this is not public. Okay. Barbara Welsh, what is impact on Hawaii Island with these issues?
I'm not sure I understand the question.
I think that we've covered that already, Barbara, as far as that how the hurricane issue affects Hawaii with the 28 claims from 2023 that Sue spoke about. So we'll skip to the next one. Lorna Chan, question to ACRA. So I'll send this question to ACRA after the fact. Next question. I guess this is from Richard Manugas. Have you spoken with the Honolulu Board of Realtors on the underinsured buildings?
Oh, I've spoken to bankers, I've spoken to board of realtors, I've spoken to mortgage people, I've spoken to the insurance commissioner. I've given him some ideas. I don't know that he appreciated them or was going to do anything with them, but I've been trying to solve the problem. But yes, I've been doing a lot of speaking about it.
Thank you. And thank you for all of that talking that you've been doing with all of the associations, including HAMBY, because this information is so valuable. And definitely as lenders in our office, we get calls about it every single day. As I imagine you are getting just thousands a day. Next question from Naki Wilson. Can you share more about what makes up the secondary market in regards to insurance?
Okay, well, the standard market are people who are housed here in Hawaii. Okay, so you have your companies, you have Fireman's Fund, you have First Insurance, you have DB, you have Island Insurance that doesn't have the capacity to write big buildings. You have Dietrich, you have Crum & Forrester, you have State Farm and Allstate, but State Farm's not writing any new condos since Iniki hit. Okay, and Allstate doesn't write condos because they don't want the big, huge exposure. So even though these are markets that are here in Hawaii, out of all of our markets, we only have 3 that are writing our concrete high-rise condos. Okay. And of course, the wood frame condos they're not writing because of the hurricane exposure. So that is the standard market. I'm always trying to get more standard people to come to Hawaii and write our business. And even though I have 1,100 condos or homeowners associations that say, how many do you need to come? 200, 300, I'll make this work for you. The minute they see what our loss ratios look like, the minute they see that our buildings are old and we're not sprinklered and we're not maintaining, they don't want them. Okay, they say, no, thank you, we're not coming. So that's the standard market. So the next market is what's called the secondary market or the surplus lines market. In the insurance world, it's called surplus lines. And it's called surplus lines because they're not housed here, but they're writing coverage here. And the client has to pay a tax that goes to the city. Okay, and that's how it works. So they're not monitored by our insurance commissioner. In other words, First Insurance, Fireman's Fund, and all the standard markets, Island Insurance, all the ones that are standard, their rates are monitored by our insurance commissioner. The secondary market their rates are monitored by whatever state they come from. Okay, so they get to write higher than we would allow here normally and we would never go from a standard market to a surplus lines marketplace unless you had to. You're being bad condo, off you go. We don't want you anymore. Okay, so that's why it's very important to keep your standard market condominium happy by doing what they ask you to do. If they ask you to have a plumbing inspection, do a plumbing inspection. If they say that you have a spalling problem, fix it. Don't say we don't have the money, okay? Because then what's going to happen is they're going to say, well, then if you don't have the money to fix your unit up, your condo up, we don't want to insure you. Why would you want to insure something that's going to create a claim? So the standard market and the secondary market, and the secondary market is people from all over that will write in our state. AIG does a lot, Lloyd's of London does a bunch. So it's just all kinds of people writing the secondary market, but it's a higher price, but we can get the coverage.
Thank you. And I think that what you said was very valuable, which is it may be ugly now, but if we don't take care of it, or if the buildings don't take care of it now, it will only grow and become more expensive and more problematic. So I think that's really the message. Next question comes from Lorna Chan. Do you anticipate any legislation that will acquire AOAOs to increase hurricane coverage so that more condos will be eligible for Fannie Freddie loans?
Okay, I'm hoping for legislation, but not to force company insurance condos to increase their coverage so you folks can loan, but so that they're insured properly. The problem is, it's the cost. And how do you say you're in condos, too bad, so sad, you're going to have to pay $600,000 more? They can't legislate that. Okay, but what they can do is come up with a solution to say, maybe we should reinstate the Hawaii Hurricane Relief Fund. We had to do that when Iniki hit. We came up with the Hawaii Hurricane Relief Fund because nobody would write hurricane in our state. Well, maybe we should resurrect this Hawaii Hurricane Relief Fund. Maybe a way to protect it would be to force all owners who are in a condo that doesn't have 100% hurricane to buy a small policy, which costs about $300 a year, which is a hell of a lot less than $300,000 for hurricane coverage. If you had 100 units, it's $30,000 to buy a $300 hurricane policy that will cover the interior as built, so that I know even though they don't have enough for the whole building to take care of all the damage inside, every owner has an inside policy. You put back my windows and my doors, master policy, I'll take care of the inside. So that is I hope legislation like that comes out, because what will happen is we can continue on with our standard markets, and then we can still make owners be responsible for their interior at a lot less in premium, so they're not having to increase the maintenance fees by $7,000 per person, or assessing someone $7,000 where you pay $300 more, Sue, a year, and we've got your hurricane protected for your unit, and there's 50 units in here, and we need every unit owner to go out and buy this policy and prove it to us that you bought it. I'd like that kind of legislation to come out, because it solves the problem, puts it on the backs of the owners at a very affordable price, as opposed to saying, where there's a new law and you will all raise your premium, you all raise your coverage to 100%. And where do we get the 600,000 or the 300,000? I mean, if you're going to do that, you could have told us to all put our sprinklers in, period. And we don't care how you get the money, do it. But that's not us. You know, you got to worry about the people who are in your complex and come up with affordable rates. So I'd like to see something on the other side be done, where owners get involved in helping to maintain and keeping their unit covered.
Awesome. Thank you so much for that. That's so enlightening. Next question coming from Howard Pock. Do you envision the state reinstating the SMRF like they did after Iniki if we continue to lose insurers?
You know, I hate to guess what the state's going to do, the legislature's going to do, you know, because they're their own people. They have their own ideas. There's groups that are forceful more so than others, and your guess is as good as mine, I guess I would say.
Thank you. And we've got time for about one more question here. Let's see. From Rory Matsumoto. Is the lack of sprinklers and or older plumbing somehow connected to this decision by insured to reduce hurricane coverage for that particular building?
No, has nothing to do with that. There are brand new high rises that are sprinklered and have no claims, and they're still getting a reduced hurricane. It's just the fact that the insurance company doesn't have enough capacity to offer the total, so they can only offer a lower portion. And with no other company writing new business, it's not like you can take it to a company that has the capacity, because they're not writing right now. So that you have to stick with who you're with. And if that company can't offer you enough and you want to stay in the standard market, it's just has nothing to do with your pipes, nothing to do with your sprinklers.
And then the last question for today will come from Randy Muraoka. How are the boards, the AOAOs basically, justifying taking on the risk of loss if there is an event and they are underinsured?
Well, it is a huge risk that they're taking. They're making a business decision, which they always tell us to make as board presidents, make a business decision board. You know, do we assess our owners? And I do know of one condo that went out and asked their owners to vote. Do you want a sublimit for your hurricane, or do you want to spend $500,000 more dollars, so much per unit? And the board and the owners voted no. So at least that board did what their owners asked. So it's going to be kind of hard if the hurricane comes and that one gets damaged because the owners voted. Most boards are taking that attitude that their owners cannot afford to come up with a $7,000 this year, cannot afford to go up with a $7,000 assessment. Does not mean that they're not, some of us are not saying, okay, next year we're gonna have the same problem. We want 100% hurricane. We're gonna have to go out and spend the extra $500,000. Let's budget for it. There are boards doing that, hoping to make it through this hurricane season coming up like they made it through last year's hurricane season. So cross your fingers and pray.
Well, my fingers are definitely crossed, Sue.
No, it's tough.
All right. Well, thank you everyone for joining us today. Thank you, Sue Savio, so much for joining us today. As we mentioned earlier, for everyone on the call that did register for this webinar, we will be sending out the recorded version of this webinar so that you can revisit the information. And please reach out to Hamby with any additional questions that you may have. We're here to serve you, our membership. And for those that would like to become a member of Hamby, remember there's plenty of great information coming forth and great committees that you can join. So we look forward to the next time, and we'll see you soon. Thank you, Sue.
Thank you for having me. Aloha.
Aloha. Bye-bye.
Bye.